driver, he dropped off a load at 8 a.m. I factored it this morning. I'm about to get a wire transfer for that load in about an hour. So you get paid every day in this industry.
I'll tell you, you need to go ahead and put $100,000 into the account so that you could borrow 80,000, and that would allow you to get into the game and purchase 2 trucks within the time frame that you have it. And now what happens is, the reason why that's important is because now you have $100,000 earning interest, but then you have your truck start to make money for you. Then go ahead. You're going to add anything to that, Mitch?
Oh, well, we just giving you the walk through the door procedures on how to get through. As far as, buying a truck, if you want to talk about, your infinite banking versus, or your infinite banking, how you can infinite bank, how to get in as far as buying the truck part of it, we can go into that. So on the truck side, say, if you're buying, on a used truck, you're looking at about, I say anywhere between a down payment of about 0 to 25,000. That's like kind of extreme on 25,000 in. But if you got good credit, I mean, it might not be 25,000. But you're looking at a truck payment of about $800 to about $1,500 a month on the buy side. Just strictly buy side. But also, like I said, it depends on the credit. Of course, you don't have to use a trailer. You can do power only. Power only is what you use to basically, you'll have a tractor and you'll use somebody else's trailer for one of these big companies, and you'll just run their loads to wherever they want you to run. And then, you got to basically deliver their trailer back to them and basically keep repeating the cycle after you do your loads or whatever the case may be. But, there's other ways around that too. But if you want to actually buy a trailer, then you're looking at about $0 to $1,500 down to buy a trailer. And you're looking at about $200 to $600 a month, depending on credit, of course.
Someone wanted to buy that outright, where they said, okay, I want to go ahead and just get the trailer. How much do those usually run?
A new trailer costs you about $30,000.
Okay. What about used?
Used trailer, you want to be within 10 years old of the trailer. So say it's 2011, you want a trailer that's 2011 or newer.
Okay.
So those right now, man, right now those trailers are running, 15, 16,000. If before all this stuff happened, about 6-7 months ago, you can get a trailer for about 11, 10. 2014 for about 11,000.
Oh,
you see what I'm saying?
So
but
prices
now,
went up because more of a demand.
More of a demand, and it's hard to find trailers right now in this economy.
Got it.
Yeah, it's really hard.
Okay. How do you make money? Like, what's the process that you need to do to start making money, and then what's that timeline for that money to start coming in?
Well, let's back up a little bit because I left some stuff out. So on the truck insurance, there's a couple more things we got to do up front when you're buying this truck. So we're talking about truck insurance. Truck insurance is about $3,000 to $6,000 down. That's just to get your truck insurance, and then you're looking at about $1,500 to $2,500 a month on truck insurance.
Okay.
All
so
right.
You said $1,500 down and $1,500 a month on average.
$3,000 to $6,000. $3,000 to $6,000.
$3,000 to $6,000 down,
and then $1,500 to $2,500 a month, monthly, that you can't even get away from. Not until your season. Well, not until your season. When you're season, then there'll be a different rate monthly. But in the beginning, this is the rates in the beginning. So, when you get your truck, your registrations, your tags, your IFTA, your decals, you're looking at about $1,500 to $2,000 flat fee for a combined amount of that. Those items that you got to get: the registration tags, IRP, IFTA, decals, stuff like that. You got to have this stuff to even get on the road.
Yeah.
Also, you don't have to do the pre-pass, but pre-pass gets you through weigh stations. Weigh stations is where they check the truck out, make sure it's in compliance. Those are the things that you see on the side of the road when the cars usually go by. Probably never pay any attention. but those are waste stations. That's where you see all the trucks going into. Well, if you get a free pass, you don't even have to go through those waste stations. You don't even have to go through them. You can just kind of get a pre-pass and you kind of can flow through traffic like the cars does. So that's, that's optional, but most in trucking, you want to be able to have that because you don't want to have to stop and, lose time. Then you need a drug and alcohol consortium. That's $150 a year. You got to have that to be able to have your drivers get drug tested randomly. And on the hiring process of it, they get, tested just to get hired onto your company. So
got it.
Yeah. So, you got to have that, and that's per year also. And then last but not least, you need a time clock. Basically, like when you used to have a 9-to-5 job. Well, this is a device. It's called an ELD. It keeps track of the amount of hours that the drivers drive every day. They implemented this because back in the day, they used to have like e-logs and, you got drivers driving over 12 hours a day, things was a little different. They, a lot of accidents and stuff like that, a lot of fatalities. So they created this ELD system for electronic time clocks in a truck. So, and that's about $500 a year as well. That's just on the buy side. So you're looking at a total of, you got monthlies, and I think I didn't answer one of your questions, but I'm gonna answer it in a minute. On the buy side, you talking about monthly. On the buy side, is starting out. You talking about on the high end, you talking about like 35,000 just to get into the game. On the buy side. But to answer one of your questions, I think you said how much does it cost to buy a truck? Did you answer that earlier? How much does it cost? You're looking at about 55, 65 for the same truck that was about 40 to 50, 6 or 7 months ago. Right now.
Wow.
Yeah, so that's to buy a truck straight out, no monthly payments and all that stuff.
Got you.
Yeah.
All right. And so now that we have an idea of what it takes to buy a truck and how to get that part started, is there a difference when it comes to what's the difference when it comes to buying it versus leasing it?
Okay, cool. So on the lease side, you're gonna get. So Mitch was kind of talking about used. I don't know if you caught that or the people that catch that. Those are numbers for a used truck. So the 60,000 is for a good used truck. A brand new truck on the buy side is gonna run you about 120 to 150 K, 120,000, 150,000. So on the lease side, it's a deposit. So it's based off like your business credit worthiness or your file, how long you've been in business, etc. You could put a deposit of $0 all the way up to the most I've ever seen was 10,000. So $10,000 deposit. And that deposit is refundable at the end of your lease term, obviously. But just to be transparent, they'll probably nitpick at everything to try to reduce that deposit to give it back to you at the end of your term. But it is a refundable deposit that you get at the end of your lease term. So let's say we had 10,000 for the deposit for the truck. Now this is just for the truck. For the trailer, again, I've seen little as $0 on the deposit to 2,000 for the trailer. So right now we all in 12,000. So the beauty of the lease that I had, because again, I was on the buy side. I had to do all that paperwork and all the stickers and the tags and everything that Mitch is doing. And it's a lot of small, tedious work, and it is a lot of room for error. On the lease side, it's not yours. So one of my biggest things that I live by is, own nothing but control everything. And that's literally what you're doing on the lease side.
Absolutely.
So you pay the deposit, the lease company, they take care of all of that. They got the stickers, they make sure all the equipment is in check and tuned up and pristine for you. So you pay that deposit, okay, boom. So truck and trailer, let's say on the high end, you 12,000 in, and then the insurance. Can't run away from the insurance. That insurance you can't run from it. Will not save you with that insurance. You got to put like you said 3,000 to 6,000. So let's just say on the high end we had let's just say 5,000. 6,000 is kind of outrageous. And another a quick gem is for everybody who lives in these big states, New Jersey, New York, California. That's when your insurance down payment will be outrageous because they're gonna tax you. So how insurance works is you'll get an insurance quote for the whole year. So let's say if your insurance quote is $24,000, then that's what, like Mitch was saying, you'll be paying about $2,000 a month because 2 times 12 is 24. If you live in New Jersey, New York, and stuff like that, I see people getting quoted at like 35,000, 30,000. So now they paying 25, 3,000 a month with that $6,000 down payment. So you got the 12,000 truck and trailer insurance, let's say 5,000, so that's 17,000. And then yes, you got to get the ELD and all of that stuff. So I would say between all the stuff that you have to get that you can't, run from, whether you want to buy or lease, and then the deposit for the leased equipment, you only really need around like 20K on the leasing. So you looking at really like almost double your startup. On the lease end, you can get in the lease game. I have students who have gotten the lease game with a little under 20,000. So I'm gonna say 20,000. And then on the buy side, yeah, you're gonna need about 35 to 40,000.
Okay. And then buy side, 40,000 plus. Okay.
Yeah.
There we have it. Now, with that being said, y'all, so somebody is official. They get in, they got their stuff. How do they make money? So how do they make money? What's those timelines? How do you get your money back? What does that look like if we're talking about return on investment now?
Okay, so how do you make money? I'm trying to make it as quick as possible. I don't know if we're on a time crunch, but so pretty much every day, your driver will do a load. So let's say you pick up Monday, drop off Tuesday, pick up Tuesday, drop off Wednesday, etc. When you do when you get factored through a factoring company, like I said, you're getting those deposits every day. So just based off of whatever your monthly expense, again, everybody's monthly expense will be different because everybody's blueprint is different for their trucking business. But whatever your expenses are, you could just, funnel it to see what your profit margin will be. On average in the trucking industry, you're looking at about a 30 to 35% profit of the we make between 20 and 25,000 gross. So 35% of 25,000 is 8,750. So that'd be that. So on the lease side, if you started with 20K and you get in a 35% return on net profit on a 20K month, you can get your ROI back in 2 months, 2.5 months. On the buy side, your profit margins are way greater, but it's more risk because you got to take care of the maintenance and roadside and all that type of stuff. So I just gave you a lease. I just gave you the lease number. So on the buy side, if I'm profiting about, let's just say low end, 6,000 on the lease. On the buy side, I'm pretty sure Mitch will probably make almost double that, probably about 12K. But with that 12K on the buy side, he has to have a safety net when his equipment breaks down. Not if, it's when it breaks down.
Right.
And I like to emphasize that because people are running their stuff and think that stuff not gonna happen, and then they don't have any money to take care of the equipment. And that's the biggest thing in trucking. Honestly, is you really can't lose in trucking. But the reason why people do lose is because of money management.